Hey everyone, welcome back to Corporate Decoder. Today P.L.B.C just filed its 11K annual report for its employee benefit plan, and I am seeing a few really interesting details about how money is managed for the folks at Plumas Bank. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing gives us a peek into the investments held by the Plumas Bank 401k profit sharing plan, and it tells us a story about how the company is investing in its employees' futures. So this is the annual report for the Plumas Bank 401 profit sharing plan. Think of it like a yearly checkup on how the retirement money for Plumas Bank employees is doing. This report covers the year ended the 31st of December 2025. It is important because it shows us what kinds of investments are in the plan, how they performed, and how the money flows in and out. The folks who run the plan, which are the plan administrator and the trustees, are responsible for making sure everything is managed properly and reported accurately. And just like any big company, they have independent auditors, Elliott Davis LLC in this case, to check their work. They've been auditing the plan since 2024. Now, let's dive into the heart of the report, the financial statements. This first table here, the statements of net assets available for benefits, is like the balance sheet for the retirement plan. It tells us what the plan owns and what it owes on a specific day, in this case the 31st of December of 2025 and 2024. Looking at 2025, the total investments in the plan are valued at over $30 million. That is a pretty substantial amount, showing a good chunk of money is being invested for the employees. Compared to 2024, where the total investments were around $26 million, we see a healthy increase of about $4 million. And this growth is happening even after accounting for notes receivable from participants, which are basically loans that employees have taken out from their own retirement accounts. The total net assets available for benefits, which is what is left after subtracting any liabilities, grew from about $26.7 million in 2024 to over $31 million in 2025. That is a positive sign indicating the plan is growing. Next up, we have the statement of changes in net assets available for benefits. This statement shows us all the money that came into the plan and all the money that went out during the year 2025. It explains how the net assets grew from the beginning of the year to the end. On the addition side, the plan saw significant growth from investment income. The net appreciation in the fair value of investments alone was over $2.3 million. That means the investments held by the plan increased in value by that much during the year. On top of that, they earned over $600,000 in interest and dividends. That is a total of almost $3 million in just investment income. On top of that, there were contributions from employers, participants and rollovers from other retirement accounts, totaling another $3.7 million. So, in total, the plan had additions of over $6.7 million. Now, for the deductions, this is where money leaves the plan. The biggest category here is benefits paid to participants, which amounted to over $2.2 million. This is the money that people are actually taking out of their retirement accounts, either because they've retired, left the company, or are taking loans. There were also about $63,000 in administrative expenses, which covers the costs of running the plan. So total deductions were just over $2.3 million. The difference between additions and deductions is the net increase, which for 2025 was about $4.4 million. This increase, when added to the beginning net assets of $26.7 million, brings us to the ending net assets of $31.1 million, which matches what we saw in the previous statement. It is a pretty strong year for the plan's growth. Okay, now we get into the notes to financial statements. These are super important because they explain a lot of the details behind the numbers we just looked at. They are the footnotes that give you the real story. This first note describes the Plumas Bank 401 profit sharing plan itself. It tells us that the plan was set up back in 1988 to help employees save for retirement. It allows employees to put aside a portion of their salary before taxes are taken out. It also mentions that new employees can join the plan after they've worked for a certain amount of time and reached a certain age. In this case, 18 years old and completed 3 months of service. Importantly, the plan is designed to comply with regulations like ERISA, the Employee Retirement Income Security Act, and also has features that comply with the Internal Revenue Code, or IRC. This means it is designed to be a tax-advantaged retirement savings plan. The note also details how participants can contribute, including rollover contributions from other plans. It mentions that all participant contributions and their earnings are 100% vested, which means they are fully owned by the participant right away. For employer contributions, there is a vesting schedule. This means that if an employee leaves the company, they might not get all of the employer's contributions if they haven't worked there for a certain number of years. The vesting schedule described here is designed to encourage employees to stay with the company long term, with full vesting after 5 years of service. This is pretty standard for 400 wonk plans. Each participant has their own account which is credited with their contributions, earnings, and any employer contributions. It is also charged with withdrawals and fees. The amount a participant will receive at retirement depends on the value of their vested account. And a key feature is that participants get to direct how their own money is invested from a list of options provided by the plan. This part is really interesting because it tells us that participants can choose from various investment funds offered by the plan and can even change their investment choices daily. This gives employees a lot of control over their retirement savings. This section explains the rules for loans that participants can take out from their retirement accounts. They can borrow a minimum of $1,000 up to a maximum of $50,000 or 50% of their vested account balance. Whichever is less, the loans are secured by their account balance and have interest rates that are tied to the prime rate plus 1%. The interest rates on these loans in 2025 range from 4.25% to 9.50%. Loans generally need to be repaid within 5 years, but if it is for buying a primary residence, the repayment period can be extended up to 20 years. This feature allows employees to access funds for specific needs while still encouraging repayment. Here we get into how the financial statements are prepared. They are prepared on the accrual basis of accounting, which means income and expenses are recognized when they are earned or incurred, not necessarily when cash is exchanged. The plan uses estimates and assumptions, just like any financial reporting. This part is crucial because it explains how the investments are valued. Investments held by the plan are generally stated at fair value, meaning their market value. However, there is an exception for fully benefit responsive investment contracts. These are reported at contract value, which is what participants could actually receive if they were to make a withdrawal. This distinction is important. For investments valued at fair value, the plan records purchases and sales on a trade date basis, and interest and dividends are recorded when earned. Net appreciation includes both realized and unrealized gains and losses on investments. This note details investments in contracts with insurance companies, specifically Principal Life Insurance Company. The plan has a group annuity contract with Principal, which is reported at contract value. This contract holds participant contributions and earns interest. The contract value at the end of 2025 was about $822,000, which decreased from about $1.07 million in 2024. The insurance company guarantees the principal and a specified interest rate. There are some specific events that could limit the plan's ability to transact at contract value, such as a plan termination or bankruptcy of the plan sponsor. However, the plan administrator does not believe these events are probable. There is also a mention of a surrender charge if the contract is terminated without sufficient notice, and employer-initiated transfers over 10% of the contract value are also subject to a fee. The interest rate credited for this contract is based on a formula but can't be less than 1% or greater than 3%. There is also a small investment in paid-up deferred annuities from Principal Pension Builder, which totaled around $2,700 in 2025. This section is all about how the fair value of investments is determined. They explain a hierarchy of inputs used to value investments, called the fair value hierarchy. Level 1 inputs are unadjusted quoted prices for identical assets in active markets. For instance, if a stock is listed on a major exchange and actively traded, its quoted price is a Level 1 input. Level 2 inputs are other observable inputs, like quoted prices for similar assets or prices in less active markets. Level 3 inputs are unobservable inputs, meaning they are based on the plan's own assumptions about what market participants would use to price the asset. The filing states that for Plumas Bancorp common stock, the fair value is determined by obtaining quoted prices from a nationally recognized exchange, which means it is a Level 1 input. Mutual funds, including money market funds, are typically valued at their net asset value. Also considered Level 1 inputs because they are based on underlying market prices of the securities they hold. Looking at the table for the 31st of December 2025, the common stock of Plumas Bancorp is valued at about $4.5 million, and it is all classified as Level 1. The money market fund is valued at about $1.6 million, also Level 1. Then there are mutual funds valued at a substantial $23.7 million, also all Level 1. So, for 2025, the vast majority, if not all, of the plan's investments measured at fair value are classified as Level 1. This suggests that most of the investments are in highly liquid, publicly traded assets. The same pattern holds for the 31st of December 2024, with most investments also being level 1. This note highlights a significant concentration of investments in Plumas Bancorp common stock. At the end of 2025, about 14% of the plan's net assets available for benefits were invested in the company's own stock. This is a notable concentration, and at the end of 2024, it was even higher at 17%. While it is common for employee stock ownership plans to hold company stock, this level of concentration can introduce specific risks. This note deals with transactions involving related parties, which in this context means Plumas Bancorp itself, and party-in-interest transactions. As we saw in Note 5, the plan holds a significant amount of Plumas Bancorp common stock. At the 31st of December 2025, this stock was valued at over $4.5 million. And at the 31st of December 2024, it was valued at over $4.6 million. The company also paid dividends to the plan totaling over $118,000 in 2025. Interestingly, the value of the Plumas Bancorp stock held by the plan actually decreased by about $248,000 during 2025. This is a net depreciation, meaning the sell price was lower than the purchase price on average. The note also mentions that certain investments are managed by principal, which is the trustee of the plan. This makes those transactions party-in-interest transactions. Fees paid by the plan for investment management services from principal totaled about $64,000 in 2025. And finally, the notes receivable from participants are also considered party-in-interest transactions because the participants are borrowing from their own accounts. This section confirms that the plan is intended to be a qualified retirement plan under the Internal Revenue Code, and that the related trust is tax exempt. This means that the earnings within the plan are not taxed until participants withdraw them, which is a major benefit of these types of retirement accounts. The plan administrators believe the plan is operating in compliance with all IRS requirements. This is an interesting one. If a participant wants to sell Plumas Bancorp stock to an outside party, both the plan's trust and the employer have the right to buy those shares first, before they can be sold to anyone else. This gives the company and the plan a way to keep ownership of the stock within the company or the plan itself. The price for these shares would be the same as offered by the third party. Now we're at the supplemental schedule, specifically the schedule of assets held at end of year. This is essentially a detailed list of all the investments the plan held at the 31st of December 2025. This table gives us a granular view of where the money is actually invested. We see a long list of mutual funds, with names like Principal Lifetime 2030 Inst Fund, Fidelity ADV EQ Growth Z Fund, and Vanguard Fed Money MRSKT In Fund. The values listed are the value column, which represents the fair value of these holdings. For example, the Principal Lifetime 2030 Inst Fund is valued at over $2.6 million. The Fidelity ADQ Growth Z Fund is valued at over $2.5 million. It is clear that a large portion of the plan's assets are indeed in mutual funds. Then we see Plumas Bancorp common stock valued at over $4.5 million. Confirming its significance as a related party holding, there is also Principal Fixed Income Guaranteed Option valued at over $822,000 and Principal Pension Builder valued at just under $3,000. Finally, notes receivable from participants are listed with a value of over $416,000. The total value of all these assets adds up to over $31.1 million, which aligns perfectly with the total net assets available for benefits we saw earlier. What is really striking here is the dominance of mutual funds, which make up the bulk of the over $29 million in investments at fair value. This indicates a diversified investment strategy within the plan, with participants likely choosing from a range of options to suit their risk tolerance and investment goals. The presence of principal lifetime funds suggests a focus on target date funds, which adjust their asset allocation over time as participants get closer to retirement. Finally, we have the exhibit index, which lists any attached exhibits. In this case, there is one exhibit 23.1, which is the consent from the independent registered public accountant, Elliott Davis LLC, dated the 22nd of June 2026. This consent basically allows the auditor's report to be included in this filing. And here we have the signature of Richard L. Belstock, the Chief Financial Officer of Plumas Bank, signing off on behalf of the plan. This confirms that the management of Plumas Bank is certifying the accuracy and completeness of this report. So when we look at this filing for the Plumas Bank 401 profit sharing plan, it really paints a picture of a well-managed retirement plan. The assets are diverse with a heavy weighting towards mutual funds, offering employees choices. The plan is growing steadily with net assets increasing nicely in 2025, driven by strong investment returns and steady contributions. The focus on participant investment direction and the availability of loans provides flexibility for employees. However, the significant concentration in Plumas Bancorp's own stock is something to keep an eye on. While it is common in employee stock plans, it does tie the employee's retirement savings closely to the performance of the company's stock. The put option and right of first refusal on the company's stock are mechanisms to manage some of the risks associated with that concentration. Overall, the report suggests a healthy retirement plan that is serving its participants well, with a moderate level of risk due to the company stock holdings. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this breakdown helpful, give us a like and subscribe for more, and join the Discord community linked below.